Hey everybody, Dave Bartosiak with trending stocks at Zacks.com. It's that time of year again where the banks put on their examination gowns and get their oil checked. That's right, it's stress test time from the Fed. And while this stress test doesn't involve a treadmill or EKG electrodes, I'm sure it's just as much fun. No rubber gloves needed for this one, unless you ask nice. This stress test is the Fed's test to assess whether or not lenders have enough capital on the books to withstand an economic downturn. The good news for investors is all of the big six banks in the U.S. are expected to pass the test. What do you get when you pass? A cookie? A lollipop? No, something much more valuable. With a successful passing of the stress test, the biggest banks can go ahead with their plans for dividend payouts and stock buybacks. When you add up the estimated total for the big six, it comes to $142 billion. Ironically, that's about the same size as Melinda and Bill Gates' divorce. Among the big six, JP Morgan, Bank of America, Wells Fargo, Citigroup, Morgan Stanley, and Goldman Sachs, which is the better buy right now? Let's take a look at Zacks.com to see which of these stocks are in the good graces of our Zacks rank. Let's kick things off with JP Morgan Chase. Currently, the stock is a Zacks number 3 hold. Style scores, seen better. A F for value, an F for growth, a D for momentum for a VGM composite score of F. Not the kind of grades you want to see from Jamie Dimon. But let's take a look at what's making that happen. Well, you know, it's tough out there for a bank. 71 bips of revenue growth for the current year. Revenue contraction slated for next year of 38 bips. Look at the EPS side of things. Somehow on that 71 bips, they managed to squeak out 50% earnings growth year over year, something unheard of for a bank. But back to reality next year, 10% contraction. That's probably why we're looking at a Zacks rank number 3 hold there. And recently, these earnings estimates to the downside over the course of the last 30 days for the current quarter, for next quarter. Current year, you got a mixed bag, a 1-1. Next year, same sort of thing. But if we look here, you know, 273 for the quarter, then it bumped up to 312, and then now we came back down to reality to 307. Same kind of thing happened here, 260 up to 293, down to 291 for next quarter. But I like to look at the years, right? Because the quarters, that's a flash in the pan, but up from 1077 to 1343 back down to reality. This is still great overall. I think anytime you see 1077 up to 1334, that's pretty strong. So in terms of a Zacks rank number 3 hold, this is pretty good. 1115 up to 1199 for next year, moving in the right direction. And if you look at the recent surprise history, always surprising to the upside. It's kind of funny that a bank that's talking to analysts, right? And these analysts can't figure it out within a reasonable percentage what the estimates are, what the earnings are going to be. I mean, off by 47%, off by 39%. These are all in the positive direction, but still, I think these guys are keeping their cards a little close to the chest when they're talking to analysts. Now let's take a look at Bank of America. Again, Zacks rank number 3 hold. Style scores, also not too good. D for value, F for growth, B for momentum. VGM composite scores still of F. Similar situation when you compare it to Chase, JP Morgan. You got a little bit of sales growth, and then you look at the EPS growth in the next year, current year, 66% current year growth for Bank of America on the earnings side, but not so good on the revenues. And the next year, they're going to get a little bit of revenue growth, little bit of earnings growth. So in terms of growth, that's looking a little bit better than what you had over there at JP Morgan. Similar scenario where these numbers are actually moving in a positive direction. 66 to 75 for the current quarter, 60 to 75 for next quarter, 248 to 312 for the current year, 284 to 313 for next year. So definitely moving in a positive direction. Good to see that from a Zacks rank number 3 hold, but still it's a hold. Are we noticing a pattern here, folks? Citigroup, Zacks rank number 3 hold. C for value, F for growth, F for momentum, F for the VGM composite score. And again, not a lot of revenue growth, ton of earnings growth, no revenue growth, earnings contraction. The story just goes on and on and on. The same thing. And again here, $1.66 up to $1.94 for the current quarter. $1.64 to $1.30 to $1.90 rather for next quarter. $6.97 to $9.16 for the current year. That was a big jump. Next year's number pretty much flat. So that's what you can expect from these big banks. So far, 3 for 3. Not impressed. Wells Fargo, Zacks ranked number 3, hold. D for value, F for growth, C for momentum, F for the VGM composite score. Yet again, I believe that's 4 for 4 on these major banks. And let me guess, they're going to have huge EPS growth this quarter, or this year. Dun, 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 and nothing on the sales side. Next year, nothing, nada, dud city again. And let's look at this trend. Trend is your friend until it ends. It seems like all of these banks did the same exact thing. The estimates moved in the same exact direction, and now everybody is sort of left wanting at the same time. Goldman Sachs, the bank that's a bank only when it's convenient for it to be a bank. Zacks rank number 3, hold. A little bit better on the style scores. C for value, F for growth. There's an A for momentum. That gives it a VGM composite score of D. Totally breaking the mold here. No, they're not breaking the mold. Let's take a look. Again, sales, boom. Earnings, great, right? And then next year, what's going to happen? Well, we're not going to make so much money, and we're definitely not going to make so much money. So a theme developing. Now, granted, I'm sure these guys made a couple bucks trading this year, right? And that's the thing. They don't think that's going to continue forever. Look at this. It's the same. 751 up to 915 for the current quarter, 710 up to 774 for next quarter, 3018 to 4470 for the current year, 3253 to 3576. So all of these are moving in the right direction. You have most of the time there's one analyst to the downside, maybe one analyst to the upside. Very similar pattern we're seeing amongst all these. Out of the 5, none of them are really jumping out at me. But what about Morgan Stanley? Dun, 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 dun. We finally broke the mold. The Zacks ranked number 2 buy. B for value, D for growth, A for momentum, VGM composite score of B. So there you go. We're already moving in a positive direction. This one looks like it's going to take the cake today. Same story, though. 15% revenue growth this year. Of course, the EPS side not as attractive as it was for those other banks. Next year, they think it's going to squeak on down a little bit, barely. I mean, this has got to be way far down here, right? $55.84 billion for the current year, $55.84 billion for next year. So we're talking in the millions is what the difference they believe is going to be. Next year EPS contraction of 2.62%. And again, a little bit of a movement to the upside in that EPS. So we talk about current year estimates coming to the upside. So far, this one I believe is going to be my winner. I want to show you one last chart. That is the price consensus and EPS surprise chart on Zacks.com. This is my favorite singular chart that you can have on Zacks, and really for any stock ever on earth. Left y-axis, you have the EPS. The multicolored lines represent the evolution in our Zacks consensus estimates. We know that price moves along with estimates, but this really hammers it home. The right y-axis is the price. This black line in here is the stock's price. And you notice this upward trend in estimates to go along with the upward trend in the stock. That's what you want to see. Really, ideally, what I use this for is sometimes you get a stock that's come down while the earnings estimates have gone up. And that is the type of divergence I love to see. We're not seeing that there, but we are seeing price supported by this move. So of the big 6 banks, I would be buying Morgan Stanley, ticker MS. Every time you share this video, somebody's $35 overdraft fee gets returned to them. Subscribe to the YouTube channel, Twitter @Bartosiastics, and be sure to check out Zacks.com/promo for this week's special report about the rebound of the century. For Trending Stocks, I'm Dave Bartosiak.